Where do we start? Well, let's just start quickly with the markets. We've been talking about the markets the last few days, so we're going to be watching the markets as we move forward. Markets are a great indication of what I think a lot of smart people think about what's going on. They're also a great way in which Trump is feeling pressure. From every indication, Trump changed his mind about the tariffs. Well, not completely his mind, but about an element of the tariffs, because of the markets, primarily the bond market, but also the stock market, and because of all the businessmen calling him or commenting on it. As we know, Trump is an avid Fox News viewer. He watches everything. Well, Jamie Dimon was on Fox News the other day talking about the risk of recession. And Jamie Dimon knew that Trump was listening, so he kind of phrased it as, yeah, he could see the benefit of tariffs in some situations, but this was no good and was causing damage. I think slowly that chipped away. Remember, Trump's strength is other people. Trump's strength is getting a sense of other people's emotions, angst, worries, fear. Remember, yesterday was asked why he rescinded the tariffs. He said they were going a little, what was the term he used? I forget the term he used. But basically, he ended up saying it's fear. They were too afraid. And I think he sensed that, and he got that message from people calling him up, and that's why he changed his mind. He's a pleaser. He wants to please. He doesn't like it that the market doesn't like what he's doing. It's not the case, yippee, that was the word he used. The market was yippee, which he meant fearful. Anyway, that I think is what, to a large extent, drives him. So he pays attention to the market because he wants to be loved. He wants to be liked. He's not just, let's just smash it all up. I don't care what happens. He's got certain people that he pays attention to, and he wants them to admire him. He wants them to like him. He wants them to think he's one of the good guys. He's got MAGA. No matter what he does, he has MAGA, right? But beyond that, he pays attention. That's why he watches TV. TV gives him a sense of what people are thinking. He's a complete second-handed. He's a complete second-hander. Everything is about the reaction it gets from others. And he's surrounded himself by people who are mostly going to nod and smile and adore him and say he's God's gift to humanity. Maybe Bassett is the one person within the administration, Treasury Secretary, who is a little, is willing to push back a little bit, not too much, a little bit. All right, so markets today. Yesterday, we saw NASDAQ went up 12%. S&P went up, 9%? It was insane. I mean, the market just shot up as if it was all over. Uncork the champagne. The golden era has begun. Tariffs no longer a threat. And I think overnight, people sat back and thought about it. And the reality is that we have 145% tariffs on Chinese goods. They have over 100% tariffs on U.S. goods. China is the third largest trading partner the United States has, behind Mexico and Canada. China is also, from a geopolitical perspective, important, right? And yet we are playing chicken with China. We're basically completely destroying trade with China. That can't be everything's normal and everything's great. So maybe 12% increase in the NASDAQ, maybe a little bit too much. We also still have 10% tariffs on everybody. Before, the other day, we had basically under 2% tariffs generally on the world. Now it's 10%. And then on top of that, we still have 25% on autos. We still have another 25% of steel. And Trump is promising tariffs on microchips and tariffs on other metals. And he's not giving up on a whole array of targeted tariffs. And the market today dropped significantly. So the NASDAQ dropped 4%. Remember, when a market drops by a certain percentage, when it goes up that same percentage, it doesn't go back to where it started. I'm going to give you a quick, simple example, just so it really sinks in, right? If a stock is trading at $100 and it drops by 50% to $50, now how much does it have to go up in order to return to the previous price? If it dropped 50%. If it goes up now 50%, it's only at 75. It's still down 25%. It actually has to go up 100% in order to make up for a 50% drop. So it's not symmetrical. A 4% drop is not the same as a 4% increase. Anyway, just thought as an aside that, it's simple math, but you should internalize that. So the market, NASDAQ was down 4%. The other indexes were down, 3%, something like that. S&P 500 was down, I guess Dow was down 2.5%. S&P down 3.5%. Not good. Not good, but realistic and much more appropriate than the euphoria yesterday. At the same time, bonds today opened up, started the morning up. Interest rates down. Remember, prices go up, interest rates go down. But during the day, that slowly eroded, and ultimately bonds, 10-year bonds at least, ended up flat, so unchanged. Now, both the stock indexes behaving the way they did and interest rates behaving the way they did, under other circumstances would be surprising because inflation numbers were reported this morning, and inflation numbers were better than expected, significantly better than expected. So low inflation should suggest lower interest rates, and that's how the day began. But then over time, people said, people were still selling, and the selling pressure still existed. And while bonds didn't close down, they closed up a tiny bit, basically flat. Not what you'd expect given the inflation number. And the same with stocks. Inflation down means more likely that Federal Reserve reduces interest rates. Federal Reserve reducing its interest rates, probably good news for stocks, and stocks should be up. All else held constant, but nothing else is constant, and therefore stocks went down. So again, the bigger picture is the stock market and the bond market are still troubled, are still problematic, are still viewing the future as really, really, really risky. And it's completely understandable. There's literally the two largest economies in the world. The two largest economies in the world are right now engaged in what people call a trade war, and basically are shutting down trade with one another. I mean, Chinese are not going to buy American goods if the tariffs are 100%. Americans are not going to buy Chinese goods if tariffs are 100%. What we're seeing here, if this holds, is a delinking of the American economy from the Chinese economy. That is not economically good. Now, you could argue national security-wise, I don't think it's the right way to approach the national security issue, but this is not going to bode well for the U.S. economy or for the Chinese economy, for that matter. And it's going to be interesting to see how the Chinese economy pivots. You see, China has the advantage of now being able to sell its goods to other countries. And it has the ability to cut free trade deals with other countries. China is not being run by a ignoramus with regard to trade. So China could pivot and cut deals with other countries. There's already rumors that China is in negotiation with the EU to basically eliminate the EU tariff on electric cars so that China can start exporting electric cars to the EU, and some kind of bilateral, again, low tariff trade deal. Trump, in spite of all the bluster, in spite of all the talk about deals, can't actually do a deal because he doesn't believe in zero tariffs. He's literally against a policy of zero tariffs. He wants balanced trade, and balanced trade is literally an impossibility. Now, it's possible with some countries, but with most countries, it's just impossible. So he might cut deals that are pretend deals, where other countries promise to buy American goods but never actually do, like he did with China years ago. But he's handicapped. America's handicapped right now by the total ignorance that Trump exhibits with regard to trade. It's shocking. I mean, literally shocking. But China probably actually has a healthier attitude towards trade than the United States does. So anyway, this is a major global economic event. The two largest economies in the world butting heads. It's not good for the world economy. It's not good for the U.S. economy. It's not good for the Chinese economy in the short run. And, you know, the stock market is reflecting that. And all you Trump acolytes, you know, all you defenders of Trump, no matter what he does, isn't it fascinating that if the market goes up, it's because of Trump? And this is great. If the market goes down, it doesn't matter. What does the market know? We're entering a golden era, and it doesn't matter. So they like the market when the market is signaling support for something Trump does. They hate the market when the market is signaling lack of support for what he does. But again, if you're a Trump acolyte, there's nothing I can really say. There's nothing I can do to move you away from that. Trump is, you know, the ultimate spin doctor. His people are just masters at this. But of course, nobody actually believes them except the people who are already brainwashed to believe everything they say. So Stephen Miller today comes out and says, Stephen Miller, Trump advisor, xenophobe, anti-trade, anti-American, horrible, horrible, one of the worst, if not the worst person around Trump, and that's saying a lot because there were a lot of really bad people around Trump. Stephen Miller is one of the worst. He was there in the first Trump administration. He's there again now. He wrote today, "You have been watching the greatest economic master strategy from an American president in history." This was all planned. I mean, Trump planned to tank the stock market, then reverse and see the market increase. He planned to have 145% and this tariffs on China so that there was a delinking. He planned to raise tariffs on all these countries and immediately reduce them and then negotiate deals. What deals, where the deals, who knows. This is all planned. He thought this through. This is 4D chess, according to Stephen Miller. You have been watching the greatest economic master strategy from an American president in history. This is called nutty. As George Selgin writes in a tweet, he says, the ultimate spin. 1, make markets crash by announcing horrible tariff policy, which does just what all competent economists warned it would do. 2, back off from policy, allowing markets to rebound somewhat. 3, declare the rebound proof of the original policy success. None of that. None of that makes any sense, right? But that's exactly what they're doing.